everyone, this is Adam Thomas here, and I wanted to show you all a possible trade in Caterpillar. And I set this trade up today, and we have earnings on 10/23, so this is after the October expiration cycle that ends on, I believe, the 18th or the 19th. So I'll show you the position here. So I'm bullish in Caterpillar, so I went to the October options and I bought a call. So the implied volatility percentile is in the 44th percent. So typically if this number is under 50%, I don't like to sell an out of the money put spread. So if this was over 50, I might sell an out of the money put, but in this case I bought a call. So I bought an 82.50 call, and the extrinsic value on that is 67.5 cents. So what I also did was I came out and I sold the 85 call. So what that does is I sold more premium than I paid in extrinsic value on the long option. So what that does is it puts my break-even stock price below the current market price. So if we go to a chart here, I'll show you where I entered this trade. So at the end of the day, Caterpillar dipped here and I got my entry. So I bought the call spread in this area right here. So we came up, we dipped, and then we had a super strong close. But the reason I'm showing you this is Caterpillar was trading at 83, 85 when I entered this trade. And if you look at my entry price on this spread, I entered at 135 and 134. So you can see the average price down here. So basically I have no theta decay on this position. So rather than just buying a call where I would have tons of theta decay and I would need to move higher just to break even in Caterpillar, I also sold the call, and it helps lower my break even and my risk. And yeah, it does cap my gains. So if Caterpillar goes to 85, I'll make the same amount of money as if it went to 200. And capping your gains, that turns a lot of people off of this type of strategy. But what you have to realize is over time, sure, you may miss out on that one home run trade, but over time you're collecting premium consistently, and it's going to outweigh that one possible time that you may have gotten that home run. So collecting all this premium to lower your break even and raise your probabilities, it all really does add up. So that's the trade, and I did enter this trade to kind of even out my portfolio. I'm short just about everything. The only two stocks I'm long are Citigroup and Caterpillar. Basically, my deltas weighted to the SPY were so negative, meaning if SPY goes up, my overall portfolio is going to lose value, because most of my positions are short in correlation to the market. So I went to the weak index, which is the Dow, and you can see the Dow is much weaker than so yeah, here's the Dow, and if you look at the Dow versus the NASDAQ, which is at all-time highs, so Caterpillar is a stock in the Dow, and I expect the Dow to kind of catch up with the other indexes. So I like the idea of getting long the weaker index stocks and short the NASDAQ stocks. So that's the trade, and hope that helps. I will see you all in the next update. See ya.